Gene Munster, Loup Ventures founder, managing partner, joins us. Gene, very good morning to you. Thanks for joining us. I guess my first question is just on the share price reaction we've seen. They'd underperformed the NASDAQ a bit over the prior 30 days. But are you surprised we're not seeing a bigger pullback, bearing in mind this is reduced guidance already after relatively soft guidance in January because of the issue?
Yeah, Wilf, I was expecting it to be down about 5% today, not quite down as much. I think it's important to put it into context. This is the second time in 6 quarters that Apple's missed numbers. China was part of it back in December of 18. At that point, if you look at the stock, that was a well-telegraphed miss, but the trajectory downward was 35%. And so we're talking about 1/10 of the reaction versus 6 quarters ago. And I think that context is important because on large, investors are viewing this as something that is transitional, this black swan type of event, and we'll move through it. But that really is one of the key takeaways here is the stock reaction, I think, is validation for ultimately what Apple is doing in China.
In terms of the underlying aspects as well, clearly they don't have, their suppliers don't have factories in Wuhan, in Hubei. So does that concern you that we're going to see a lot of other companies have to warn like this as well?
Absolutely. I mean, this, no doubt that there will see more of this. And I think what it ultimately leaves me with is 3 questions, as all these companies are going to be asking, but specifically to Apple. The first question is how long is this going to last? And I think Josh's setup hit it right on. We have no idea. The second is, should Apple be in China? And I think the answer is absolutely. That is debated. It was debated around some of the trade tensions earlier. But the second largest economy, clearly Apple is one of the biggest opportunities relative to U.S. tech companies. Tesla, as Kathy would know, is probably the second largest tech company in terms of exposure to China. But that's a huge opportunity. And then I think the third question, this is just beyond the headlines, Wolf, that I think is important to talk about, is Apple's hardware business. That companies like Google and Baidu and Alibaba don't have problems around manufacturing. And so I suspect that investors who have long talked about Apple's multiple should be more in a lower range because of hardware, and use this as an example of what a hardware business can do and a layer of risk, I think largely misses a bigger point. That yes, hardware has risks, but ultimately it builds a barrier, a moat around Apple's business that other companies are one click away, Facebook, Google, from losing consumers, to replicate what they're doing in China, albeit there is difficulties like this morning, is next to impossible. And I think investors should ultimately reward the company for that kind of barrier.